pullback. Gautam Shah is our market master today, founder and chief strategist at Goldilocks Premium Research. Gautam, great to have you with us here. Thank you very much. Will we push through some of this congestion zone, do you think, in the coming days and past the all-time highs and beyond? Or you think one will have to wait for the end of the year, come back in right earnest once everyone is back in 2023 for that to happen? What's your sense?
Good morning, Prashant. Well, in technical analysis, there is a saying that the longer the consolidation, the more explosive the breakout. And I think we've just seen this market passing time for the last 3.5 weeks, doing absolutely nothing. Dips are being bought into, rallies are being sold into, mid-cap, small caps have underperformed. But I think this passing time phase, I think, is read by different people differently. I think there is one camp which believes that this is consolidation, and there is another camp which believes that this is distribution, because only the top 100 has been doing well, and eventually the market will fall. But I don't fall into that camp. I think this is quality consolidation that is taking place. India VIX has collapsed to 14. Leadership among the large caps have returned. Global markets are super steady. Earnings are pretty much done and dusted, and they've gone off quite well. And seasonally, we are in a period, where global markets in general tend to do well. So I'm of the view that very, very soon you should see the Nifty get past that resistance of 18,400. Once we do that, we should get past 18,600, which was the lifetime high. And eventually, I think in the near term, we should see the market head towards 18,950. So I remain as bullish as ever. I think the market has displayed all positive characteristics. And if you throw in the breadth aspect, you'll be amazed to know that despite trading at lifetime highs, close to lifetime highs, you have the breadth, which is at a neutral level. So clearly there is a lot of room for the market to do well, and therefore all dips are a buying opportunity.
Okay, all dips are a buying opportunity. You are at your optimum or optimistic self once again. So good to see that. But you said eventually and in the near term. These are two very different things, right? I mean, eventually can mean 10 years as well. This 18,950, 19,000 level, is that like a fiscal end target? Is it a target the first half of the new calendar year? What are you looking at?
Well, Sonia, as you rightly said, I know eventually, can be a word that can be played around with, but we don't do that at Goldilocks. I think we feel that December itself, we should get past 18,600, which is lifetime highs. And there could be an attempt to get towards 18,950 December itself. I think it's a possibility. But if you're looking at slightly more medium term, I think the two numbers that we have been working with are 19,400. And the eventual target to this rally that started in March 2020 is actually 20,400. So as investors, these are stopover points. These are not very large targets in percentage terms. So I think going forward, the mid caps and small caps will take over, and the large caps will eventually take a bit of a backseat. And even in the large caps, you are seeing a lot of pockets start to do well. I mean, look at SDFC Bank coming back. This is such a big positive, not just for the banking index, but for the overall market.
Right. Hi, morning, Gautam. Good to speak to you. What about the Nifty Bank? If the Nifty is going to trend higher, that has a role to play, right? So what's the levels you're looking at on the Nifty Bank?
Well, that's the brightest spot in the market right now, Nigel. The fact that the Bank Nifty is at lifetime highs and still going super strong. There are no signs of topping out. I think this index, whenever it has led the market higher, the market has looked, stronger structurally. So I think my eventual target for the Bank Nifty is about 46,500. Now, these are medium-term targets, will not happen in a hurry. But if you're looking at a near-term level, we are working with 43,500. And as I said, with HDFC Bank joining the party and likely to possibly hit new lifetime highs soon, I think this is a market that will continue to be led by banks. IT also we like. I think we have been of this view. I know it's been a little up and down recently, but I think the overall trend there is also quite solid.
Gautam, in terms of one being able to take positional views, because I guess that is the only way you'll make money, right? I mean, ride the trend. But that also is kind of become tricky because it's the sector rotation is fast and furious, and you got to not time it well, but you got to at least be in the right sectors. So which are those pockets, subsectors? And there are so many which have come into prominence, faded, they come back into prominence, run up, rest a little bit. So which are the best placed right now in your opinion?
Very well put, Prashant, because I think this is not a market where you can just comfortably buy and hold. I think in the last 1 month, there have been landmines everywhere. I mean, look at the mid-cap and small-cap space. Some of the best names in the mid-caps have just lost 20-25%, while the market has, in general, the Nifty has done well. But I think from being in risk-off mode, I think the market is now pretty much in risk-on mode. Given the kind of strength U.S. markets have shown, what the rupee dollar has done, the dollar index, the crude factor, the gold and silver appreciation. So all of these factors suggest that smart money has pretty much moved away from a FMCG, which was the poster boy a couple of months back, and is now going back into banks, capital goods, real estate, auto, and broadly mid-caps and small caps. So these are the 4-5 pockets where we are extremely positive, and we would recommend commitments. The two sectors to stay away from are FMCG and pharma. I think pharma, there was an attempt, but it just failed once again. But the other 4-5 names which I mentioned, particularly capital goods, clearly is my favorite over the medium term.
By the way, one space is coming back in a big way, and I wanted to get our viewers' attention to that as well, is this whole travel, tourism, aviation theme. Just look at Easy Trip right now, 7% higher on that stock. It's up 50% this month already, and we had the management of Easy Trip with us a few days ago, and they were very optimistic, saying that record bookings coming through. Not just Easy Trip, Interglobe Aviation has had a really smooth run in the last few days. Once again, it's up 3% today. Is this a space that attracts you, hotels, travel, aviation, for the near term, just because there's momentum here?
Sonia, look at the bigger picture. I think COVID was a black swan. And I think because it was a black swan, I think all our lives changed. And I think people realize that you need to live your lives. And that's probably the reason this entire unlock space has done exceedingly well in the last 1.5 years. In fact, Indian Hotels has been my favorite pick all along, and I've spoken about it multiple times on your channel. And even all other travel-related, unlock-related stocks, I think are likely to do well. So I actually like the entire basket. I think, Easy Trip Planners, as you mentioned, again, I'm a user and I like the stock as well from a medium-term standpoint. So this entire space looks good. Just be a little choosy. I'm still not very comfortable with airline stocks, given what has happened on the earnings front. But X of airlines, I think everything else looks pretty good.
Gautam, all okay on the global sort of big cues which matter, oil, etc., all heading in the right direction? Or you think there are sort of speed bumps there as well?
No, it doesn't look like, Prashant. I think a month back we saw a selling climax for the world. I put out the MSCI World Index chart in one of my recent events, and I made the point that how the world was could have bottomed out. And after that, if you see the US markets, a V-shaped recovery for the Dow, the dollar index has corrected, and the NASDAQ is coming back. The Hong Kong market, which was the biggest underperformer this year, is up about 25% from the lows. So I think the world is in a good place. And when the world is in a good place, India tends to be the bigger beneficiary. And therefore, this outperformance will continue. So do not get bogged down with this underperformance in mid caps and small caps. I think the market is just laying that foundation for 18,600 and beyond. Hopefully, December is the month for that.
Okay. You also said that you would stay away from pharma stocks and FMCG stocks. What about IT? There's growing consensus now that perhaps it's a good time to be buying IT because there's value and there is growth that could come back. Your thoughts on from a technical standpoint?
See, from a technical standpoint, what I look at is risk reward. And I think after the kind of fall that IT stocks have seen, I think the last 3 or 4 months has just been all about basing. And I think it's based out really well. I know it's not been a clean recovery so far, apart from Infosys, which has seen pretty much a very strong move. But mid-cap IT is something that attracts me a lot. And I feel if you have a 12 to 18-month view, you can't lose money there. Don't have a 2-month view. I think it's going to be very difficult to play out. But I think IT as a structural story for 18 months looks good. Another space which I think has come back very well is metals. I think after almost 8 months, we turned bullish on metals a month back. And I feel given all the developments and the news around the duty, I think it seems that metals index will also go on and hit lifetime high. So that's another space where I think there is momentum investing opportunity.
All right, Gautam. So any picks you want to give us from the metals pack? Any stocks that are particularly looking good? Because the metal index has seen a sharp correction from the top. But as you said, the last 1 month, there are hopes that it could bounce back.
I like to ride the winners. I like to ride the outperformers. I like stocks, which didn't do so badly in the difficult times. So I think one stock that definitely comes up on my radar is JSW Steel. I think it's got a great chart behind it. It's got great fundamentals as well. Obviously, the poster boy in the metal space. So that's one stock that we like from a medium-term standpoint.
All right, we'll leave it there, Gautam. Thanks very much.